Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look once again on euro currency. So, well, in general, this week we've got the answer on the major question that we discussed last time, as we're dealing mostly with the weekly double repo buy pattern. The major concern that we had last week was the confirmation of this pattern. And if you remember, it was a bit tricky story, because the confirmation could fall in two ways. And first, as a normal confirmation with the new lows to be formed, which is in the beginning of the last week still was possible, or it will be a sharp earlier reversal with the forming of the double repo lookalike shape. And now we are going with the second scenario, because this type of action that we have on the bottom, when the market simultaneously drops back to the lows and shows upward action in the closing, on the weekly chart above the 3x3 moving average, could be treated also as a kind of the part of the double repo pattern. That's a bit deviated from the normal classical shape explained by the Judd Napoli. Now it seems that we're going with the second scenario. As actually news agencies explained why we were getting this pullback on the euro currency, is just because of the postponing of the tariff treats by United States. So the tariffs have been announced, they have been imposed, but on the paper. But in reality, some countries have got some postponing, others have got the cutting of the rate of the tariffs, and some countries even haven't got tariffs at all. And investors start watching on the tariffs hazard as on a kind of the political tool mostly, but not possible actually big menace for real economy and mutual relations with the countries. So whatever it is, it actually doesn't matter too much for us, because the pullback, we even could not know any about this. But based on the technical picture that we discussed even a few weeks ago, when the market hits the major monthly support, we already said that current background stands for a possible pullback on the euro currency without knowing any postponing on the tariffs. And the current level where the market stands at 102, it's not just a major fib support on the monthly chart. This is also yearly pivot support 1. And the pullback up from this level is absolutely normal situation. Now we're mostly watching at least for 107 area by the many reasons. First of all, this is the target of the double repo pattern on the weekly chart, minimum target, 106.95. Second, 107 is a yearly pivot point, and by the following of the to the framework of the pivots, market trying to test the pivot point through the period of the pivot. So since we have the yearly pivot point, so euro currency has to try to test it through the year. And as we have great technical background that is friendly to the possible pullback, why do not trying to test pivot within the nearest months, as market stands relatively close to it? So this is purely technical reasons for that. And the current fundamental background with this postponing of the tariffs perfectly fits to this combination. So that's what we could say about the longer term targets and overall technical situation on the market. Context remains currently bullish, so we have even bullish trend on the daily chart. Now if we take on daily, here we even could get another extended pattern. So take a look, it might be the hand and shoulders. So it might be the head, shoulder, head, let's say the shoulder once again might be formed, and market could show another type of the action, is kind of the ABCD target and something. But as you could see, even if we get these hand shoulders, it doesn't break overall target point. So suggesting that it might be something like this, following the harmony of this pattern. In this case, market could reach 108. As you understand, in the scale of the monthly chart, 107, 108, it's actually not a big difference. So from that standpoint of view, we can't say that this hand and shoulders brings some really treat to our long-term bearish target on euro currency. It's just a part of the upward retracement, where we have as a classic shape of the hand and shoulders, as a more advanced Jordan double repo buy pattern on the weekly chart. But mostly they point on the very similar direction and very similar target. So now, speaking about the next week, what we could say, first of all, on the daily chart, as we predicted on Friday, we have the overbought level around 105. So our Friday trading setup was completely perfect. If you take a look on the 4-time frame chart, market has reached 105.13, OP target perfectly and stopped there. So we have the catalyst triple to sell in place. So the next targets, local targets, remains the same. So we already talked about this on Friday. Next one is the ABC here, 105.65. Then it might be the changing of the shape here to the butterfly. It's 106.20, and the inner XLP will be around 106.56. So this is few targets that we could deal with on the next week, but probably it will be closer to the end of the week, just because in the beginning of the week market stands at overbought. So by this reason, it is logical to expect some pullback in the beginning of the week, some retracement. So by taking a look at the overall price shape here and the levels that we have, personally, I like the area between 103.70 and 104.25. There are a few reasons for that. First of all, this is great fib levels. 104 is the minimum target for catalyst triple to sell that we have on the 4-time frame chart. This is confidence, which is great. But additionally, you could see that first we have the previous tops here. It's great natural support resistance line. And second, this is the range of the high volatility. This is the moment of the CPI numbers release. So you can see this was really some kind of the indecision area where market very often changed the direction, but finally has chosen the upward direction and broken up. Now this area will be great support factor for price if market will reach it. So from that standpoint of view, I would consider this area in two ways. First, as an area where it will be interesting to take the long position. Second, as an indicator of the strength of the market, some kind of the market confidence, how reliable the current bullish tendency. Because by letter, the true invalidation point for a double repo is the 103.25 support, and actually these lows as well. So totally the bullish context will be destroyed if market will drop below these areas. But this is a kind of the compromise for this decision that could let us to keep the cash risk at the acceptable area. So this also might be considered, this area might be considered for stop placement behind it. Because naturally, the bullish market, if it's really bullish, it should stay above so important level. And that's particularly what we intend to keep an eye on in the beginning of the next week. So currently we're not considering any shorts. If you're a scalp trader, maybe on the 5-minute chart, you could find something with the same targets, with the same level. But our major deal is to get the dip for taking the long position. And that's particular this level that we're currently interested in.